What if I told you your bank is secretly betting against you? Right now, I'm not talking conspiracy theories. This is real. Banks like Goldman Sachs and JP Morgan have been caught short-selling assets they sold to clients. In the 2008 crisis, they packaged toxic mortgages, sold them as safe, then bet billions on their failure. Result? They made fortunes while millions lost homes. But it's not ancient history. Today, banks use high-frequency trading to front-run your stock buys, jumping ahead to profit off your moves before you even execute. Studies show this costs retail investors up to $5 billion yearly. Here's how it works. Algorithms detect your order and buy first, selling back to you at a markup. Think your savings account is safe? Banks lend out your deposits at high interest but pay you peanuts, often below inflation. In 2023, the average savings rate was 0.45%, while banks charge 7% plus on loans. That's free money for them, erosion for you. Switch to high-yield accounts yielding 4 to 5% to fight back. Ever wonder about credit card fees? Banks bet you'll miss payments, raking in $14 billion in late fees annually. They design algorithms to predict and encourage defaults, but you can outsmart them. Use apps like Mint to track due dates, or negotiate fee waivers. Banks approve 70% of requests if you ask. Crypto crash of 2022. Banks like FTX, wait, that was an exchange. But traditional banks piled on shorts. Big players shorted Bitcoin while advising clients to buy in. Net result: institutions gained as retail lost trillions. Diversify beyond bank-recommended products. Explore index funds with low fees. Insider trading isn't just Wall Street wolves. Banks use dark pools to trade anonymously, hiding moves that could tank your investments. The SEC fined banks $2.5 billion in 2021 for this. Monitor filings on Edgar.gov for unusual activity. Mortgages. Banks bet against rising rates by hedging, but pass hikes straight to you. In 2023, rates jumped 3%, boosting bank margins by 20%. Refinance when rates dip, or use tools like bankrate.com to compare, saving thousands over a loan's life. Pension funds. Banks manage trillions, but often invest in high-fee products that underperform. Vanguard studies show low-cost index funds beat 80% of managed ones. Switch to self-directed IRAs to take control. The ultimate bet: derivatives. Banks hold $200 trillion in these bets, more than global GDP. If they blow up like in 2008, guess who bails them out? You, the taxpayer. Demand transparency. Support reforms like Glass-Steagall revival. So, how do you win when banks bet against you? Build your own moat. Educate yourself with books like The Big Short. Use fintech apps like Robinhood wisely, and vote with your wallet. Move to credit. Unions that don't short their members, don't let them win. Knowledge is your edge. Like, subscribe, and comment your bank horror stories below. We'll expose more next time.